You're listening to the Goldnomics Podcast, with new episodes every month on iTunes, YouTube, and SoundCloud. Subscribe to stay informed. Hello and welcome to episode 7 of the Goldnomics Podcast, where we're looking at global developments through the lens of precious metals. And this month we have a very special guest speaking to our very own Mark O'Byrne, our Director of Research. It is legendary investor and adventure capitalist Jim Rogers. And Jim is speaking to Mark from his home in Singapore via video this month. And they're talking gold and silver and surviving the next financial crash. But before we speak with Jim, I'd just like to remind all of our listeners that you can subscribe to our podcasts on YouTube, on SoundCloud, and on iTunes. And you can stay up to date with all precious metals news and information at GoldCore.com. So, over to you, Mark.
So we don't have much time. I'm going to dive straight in, Jim. So the first question I'd like to ask you is, I was always fascinated by your taking that long-term view and how you moved your family to Singapore because of your belief that, and a belief I would share from my study of history, that the 19th century was the British century, 20th century is the American century, and your view that the 21st century is very much a Chinese or an Asian century. So I'd just like to explore that briefly with you and just, are you happy with the decision to move your family to Singapore and just talk to our viewers a little bit about that?
Well, yes, so far, certainly in the 17 years or 18 years of the 21st century, it's pretty clear that Asia's on the rise and that Europe and America are stagnant, if nothing else. Many people would say they're in decline. America is now the largest debtor nation in the history of the world, and the debts keep going higher and higher. But so many European countries also keep increasing their debt. So it's pretty clear, at least to me, that Asia is the place to be. There will be setbacks along the way, Mark. Don't worry, there'll be plenty of problems. America became the most successful country in the 20th century. But along the way, we had a horrible civil war. We had 15 depressions with a D. We had very little rule of law. We had massacres in the streets. I mean, we were a mess, but we became pretty successful. So there will be problems in Asia, certainly problems in China. But when you see those problems, my advice, I hope I'm smart enough to buy more instead of running for the hills.
Yeah, absolutely. That makes sense. And I think that the debts that's something that you talk about quite frequently. So when we look at as well, I mean, the fundamentals of the economy are driven by, supply, demand. And if you have too much debt in the economy, it actually takes away the demand in the long term. It's a demand destroyer. So, and with Trump, I just want to talk briefly about, the Trump in the White House now. It's obviously the topic du jour, and he's the man du jour, and what's happening with the trade wars that are deepening. And presumably that feeds into your thesis, and it's validating your thesis that the US and indeed most Western world economies are going to be struggling in the coming months and years.
Well, Mr. Trump is certainly making China great again. Every time I turn around, or every time the world turns around, he's doing something else, which is not good for America, but is good for China and Asia. He walked out of the TPP, Trans-Pacific Partnership, and that left Asia for China. I mean, China looked around and said, wow, is this really happening? He keeps doing things like that. And I mean, it's his job, and he's supposed to do it the way he sees fit. But boy, what the results are not good for America. I don't like saying it since I'm an American citizen, but so far he's not helping America.
Exactly. I know. I mean, that would be our view. I think most people's view in the world. It's crazy when so-called communist China is more embracing free markets far more than the US. It is a very worrying trend. So in the light of that, I mean, you are bearish, and you're bearish more so on obviously the Western world, given both the demographics and also the debt profile. And I mean, you're one of the few people that is consistently saying, listen, this debt is not sustainable. The US is now over 21 trillion, and then we have the unfunded liabilities of 100 trillion plus. So, I mean, in terms of being bearish, is your view, and there's so many variables, and it's impossible to predict, but do you see more of a 1970s style stagflation or a 1930s style depression leading to global conflict potentially, or do you see a swifter sort of collapse style scenario akin to, say, the Soviet Union?
Well, Mark, it's been 10 years since we had the last bear market, and historically, we have them more often than that. We don't have to have them more often than that, but we always have, or nearly always have. So I would suspect we're getting closer. 2008, we had a problem because of too much debt. But since then, the debt has gone through the roof everywhere in the world. People have talked about austerity, but nobody has practiced austerity. So we're going to have a serious problem when the next one comes. We always have them. And when the next one comes, it's going to be worse than most because the debt is so much higher everywhere. Even China has debt now. In 2008, China had a lot of money saved for a rainy day. It started raining. They started spending their money, the saved money, and helped save the world. But now even China has debt. So everybody has the disease now.
Yeah, absolutely, and it's all levels of society. It's household, consumer, it's corporate, business, corporate, it's financial, banks, and indeed it's government. I don't know if you saw the Institute for International Finance, their report they put out. I think it was last week, and they said that in the end of Q1, global debt reached a record high 247 trillion. So we're now talking about a quarter of a quadrillion debt, and we used to talk about billions and then trillions, and now we're talking about quadrillions. And that report is interesting because it showed just the increase, as you said, it was across all economies, all major economies and emerging markets, and it was also all stratas of the economy.
Well, I hope they counted it right too, because there's a lot of off-balance sheet debt. Certainly in America, we have huge guarantees that aren't usually counted in our debt, but it's all, even if they counted the simple debt, it's bad enough. The off-balance sheet debt makes it just going to be bad, Mark. It's not going to be fun. I hope we survive. I hope I survive. I hope you survive. I hope all of your listeners survive.
Absolutely. No, I'm confident we will. I'm pretty bearish, but I think both in Singapore and Ireland, I think we have some good things going for us, But and I'd like to explore that with you another time potentially. I know you're right. And the unfunded side of things, I think you're right. I don't think they build that into their numbers, And it's interesting. The Bank of International Settlements, McKinsey do a global debt report as well. They all do their own global debt reports, and they're actually quite different, So it depends how they're calculating it, obviously, And we all know lies, damn lies, and statistics. I think ultimately the global debt is much higher. I mean, you mentioned the US liabilities, even the UK pension funds, they're massive liabilities there, And I'm pretty confident that there's similar liabilities in most EU nations as well in terms of the pensions, and we have the baby boomers retiring, so it's a real challenge. And
well, Mark, whatever they're counting, you're right. There's a lot of debt out there, a lot of debt.
Exactly, and it's as someone said to me on LinkedIn yesterday. Well, it's global debt. We all owe the debt to each other, so it'll be fine. And who do we owe the debt to? Do we owe it to Mars? And I was just like, sorry, people said the same thing to me in 2005, 2006 before the last debt crisis. They said it doesn't matter. Sure, we all owe it to each other. But can you just speak briefly about that, just to clarify that for people, so they understand the nature of debt and the risks that it poses?
So does that mean we don't have to pay it? Does that mean that the people who are in debt don't have to pay it because we owe it to each other? Listen, if I'm a creditor, I expect to be paid. If I don't get paid, I'm ruined. All the creditors in the world are expecting to be paid. If they don't get paid, whether you're a pension fund or an endowment or whatever you are, an insurance company, you don't get paid, you're ruined. That means a lot of other people are ruined too. So the idea that it doesn't count because we owe it to each other, to my mind, is ludicrous.
No, it is, absolutely. And I think central banks have lulled us into false sense of security, because I think there's a belief that they're all powerful and they can keep interest rates near 0%. And if they could, then potentially the debt might be sustainable. But I think we all realize that, they're not as powerful, all powerful as they portray themselves in the media narrative that portrays them. So just, your view on the dollar and the euro is quite interesting in terms of, obviously you're bullish on gold and silver, but you do have a view that the dollar, you think potentially when we go into this crisis, that the dollar traditionally is seen as a safe haven, and therefore potentially it could rally. And it's interesting, obviously we're seeing that in recent months, and I think you've made that call in recent months. So presumably that continues to be your view, that we may see more dollar strength in the short term before we see the dollar roll over.
Well, when people are worried or when there's turmoil, they traditionally have looked for a safe haven. At the moment, there are not many safe havens that people think are safe. The euro, they certainly don't. So the British pound, they certainly don't. So I would suspect that the dollar will get stronger and stronger the more turmoil comes. It will get overpriced. It could even turn into a bubble market, depending on how bad the turmoil is. I hope that at that point, if it turns into a bubble, I'm smart enough to sell it and put my money somewhere else, because the dollar, as I've said, is the largest debtor nation in the history of the world, and it's getting worse. It's not getting better. So it's not going to be a safe haven down the road.
And then in terms of the other major currency, the euro, what's your view there in terms of the problems in the eurozone? Obviously, we've Brexit now as well, and what's happened there in recent days is just, I think people are realising that it could get very messy indeed in terms of it doesn't look like it's going to be an amicable divorce there.
Well, it's not just the British. There are many separatist movements throughout the EU now. Many countries want to break. There are people in many countries that want to break up, and many that want to leave the EU. So there's going to be more turmoil. And as things get bad, when things get bad, politicians always look for somebody to blame. It's easy to blame the foreigners. Throughout history, they blame the foreigners. The foreigners have different languages, different food, different religions, different everything. They smell bad. Their food smells bad. They blame everything. And so when things get bad, Brexit's going to be, the EU is going to come under a lot more pressure, as is the currency, and it's just going to make the next bear market even worse.
Yeah, your ex-partner George Soros he's warned frequently about contagion to the EU, and he thinks it's a real risk. So you share that view, and do you think the euro itself will survive, or do you think we'll potentially go back to the lira, peseta, the punt, and the various national currencies?
Well, the euro will not survive as we know it, that's for sure. I hope a euro survives. When they started, if they'd done it properly and hadn't tried to bring in everybody in the neighborhood, it might have been better sound. It would have been sounder, that's for sure. So hopefully the sound ones will stay together. It will be many fewer, and because the world needs something to compete with the U.S. dollar. U.S. dollar is terribly flawed. If we had a sound euro, it could compete with the dollar. So the euro, as we know it, is not going to survive because it's not sound. It's not properly structured. I don't know. I doubt if it will, but I hope something comes out of this on the other side. But other than that, the Japanese have gigantic debts. The only potential currency I see would be the Chinese renminbi. They've got the population, they've got the size of an economy. They're not a huge debtor like the U.S. and Britain and other countries. So conceivably, coming out the other side, the new reserve currency, new medium of exchange will be the renminbi. That's absurd to say right now, Mark. The renminbi is a blocked currency. You can't even buy it and sell it. Yeah. It's become more open every year, but it's still. By then, if the renminbi is open, totally, completely convertible, completely liquid, maybe the renminbi would replace the U.S. dollar. I don't see anything else.
Yeah, no, I'd agree, but it could take 20, 30 years. Yeah, but I think that's very much the trajectory. And on the euro, so it's interesting, and I think I see that as a real possibility as well, that we go to some form of, I think you're suggesting a sort of almost like a core euro, that we have Germany, potentially France, Netherlands, Belgium, Luxembourg, possibly the original founders of the coal and steel pact back in the day, the initial phase, if you will, an initial agreement of the European community, that they would go back to their own form of core euro, and then the periphery would potentially revert to their national currencies.
Well, you pick them. I'll let you pick them, okay? There are 27 currencies right now, 27 countries right now. You pick the ones that are going to be sound. But, even some of the ones you mentioned are not as sound as they used to be. They're less unsound than America. They're less unsound than Britain, but everybody's
France, France has its own issues. Absolutely, No, it's interesting. I mean, we've thought about it and we've written about it, and it's again, nobody knows. There's so many variables, but I do think that sometimes the conversation is that the Italians will leave, or the Spanish will leave, or whatever it is. But what may actually happen is that the Germans might decide, well, they may see the writing on the wall and may see that one of these periphery nations is going to leave, and they may take preemptive action and move to potential core euro. But I mean, who knows? That's all speculation, and that the bottom line is there's real risk there that should be acknowledged, not ignored. So just we talked about the topic du jour in terms of Donald Trump and the trade wars. It's a slightly less topic du jour now after the massive either crash or correction, depending on your perspective. But just, I know you've been taking a bit of an interest in Bitcoin, and you've been attending conferences, and you've been educating yourself about the emergence of cryptocurrencies and Bitcoin and the blockchain. I'd just like to explore that briefly with you, and just what is your view of Bitcoin and cryptocurrencies in general?
Well, the blockchain is one of the most important things happening in the world today. It's going to change everything we know. My children will probably never go to a bank in the future. I don't know what's going to happen to all these empty banks someday. I guess they'll be indoor tennis courts or something. I have no
Museums.
idea. But there'll be a lot of museums. But the blockchain is going to change everything. A lot of people will lose their jobs. But Mark, electricity caused a lot of people to lose their jobs. It also created a lot of jobs. So I'm not worried about technological progress at all. I don't suspect any cryptocurrencies will survive. They are probably all going to disappear before this is over. But blockchain has a spectacular future. I wish I could find a good way to invest in blockchain.
That's interesting. So, and even Bitcoin, I mean, are there? I will share you. I think 95 to 99% of the cryptocurrencies will disappear. You think Bitcoin itself and some of the other cryptocurrencies might survive?
I do well potentially. I suspect not, because governments don't like losing control, and all the cryptocurrency guys say, "Well, we're smarter than the government," and they are. Every one of them is smarter than every government you can think of. But the governments have the guns. Whether we like it or not, the governments have the guns. In the 100 years ago, people used whatever they wanted as currency. Seashells, gold coin, anything. Banks could even print their own currency legally 100 years ago. But in the 30s, the British government came and said, it is now an act of treason. In other words, we'll execute you. An act of treason if you use anything as money besides Bank of England money. Well, needless to say, people stopped using seashells and coins and gold and everything else because it was an act of treason. So when the government wants to, whether we like it or not, and I don't like it, it's not good for the world that they have this power, but they do, then they're going to come down on all of us. And I would suspect the others will disappear. Now, money is certainly going to change. Money's going to be on the computer, on the internet. No question about that. But it's more likely to be government money. And governments love internet money because, printing money is expensive, transporting money, accounting for money is expensive. So governments love to get rid of it. And if it's all on the internet, the government can call you up one day and say, Mark, you've been drinking too much coffee this month, or whatever. They know everything you do. They know absolutely, and they love.
No privacy whatsoever.
Yeah. It gives them total control. So I don't like it, but governments do. So I would suspect that in the end, the governments will bring out their guns and all of the competing currencies will disappear. Not good for the world, not good for you and me, but they have the guns.
And potentially we will have government fiat cryptocurrencies as well, which I know the Bank of England and many central banks are now looking at themselves.
Oh, yeah, they'll come up with their own government internet currency. Already in China, it's very hard to use money. I tried to buy an ice cream recently in Beijing. I had money. I had renminbi. I had Chinese money. But the clerk couldn't take money. It was nothing she could do. In the end, she gave me ice cream because she felt so sorry for me. This poor foreigner only with money.
Very good.
I now have my own uh, thing in China that I can use without money. I wish I'd been buying a Mercedes before. Maybe she would have given me a Mercedes when she felt sorry for me. But money is already disappearing in some countries.
Jim, yeah, you've been a long-term proponent of owning gold and silver as part of the diversified portfolio. And I'd just like to speak to you briefly about that in terms of today, in terms of both gold and silver, they look depressed, they look undervalued. We know ourselves, just sentiment is very, very poor. So in terms of the asset allocation, you tended to be more favorable, more bullish on silver than gold. I'm just wondering, in today, what are your views on the outlook for gold and silver, and how you would play it in terms of allocating to those two precious metals?
Well, Mark, I own gold and silver, and I have for a long, long time. I haven't bought any serious gold and silver for 7, 8 years, I guess now. But I haven't sold any. Certainly haven't sold any. I expect another buying opportunity of gold, maybe under $1,000 per ounce. I don't know if it's going to happen, but if it happens, I hope I'm smart enough to buy a lot more gold and silver. At today's prices, silver is more depressed on a historic basis than gold. So if I were buying one today in a big way, it would be silver. I'm not doing either at the moment, but I certainly expect as the next crisis develops. In the past, when we've had huge crises, financial crises, gold has gone down too. Gold and silver have gone down a lot, so I would expect that to happen again. I hope that I'm smart enough to buy a lot of gold, because before this is over, Mark, gold is going to go up a great deal. Gold will probably turn into a bubble in the turmoil, depending on how bad it is. So I hope I'm smart enough. Mark, what'll happen? The dollar will get overpriced. I'll sell it at the top, buy gold. Gold will be down because gold goes down often when the dollar goes up. So I'll buy gold and silver. You see how easy it is to get rich, Mark?
So simple, Jim.
Right here in the last 35 seconds, we both got rich. We'll see. We'll see.
Yeah, no, very good. And yeah, who knows? I mean, it looks quite oversold right now, but who knows? You're right, and we saw that during the financial crisis, as you said, when the most recent financial crisis with Lehman Brothers, that gold actually went down in the first few weeks, in the month or 2 months. And I remember a lot of people saying, "Oh, look, this proves gold isn't a safe haven asset." I think it went as low as $750, $800, but then subsequently, obviously, it nearly trebled in the next 3-4 years, So, yeah, who knows? And our view is to dollar cost average, and you're exposed if you don't have some allocation of gold. So we think, yeah, getting that initial allocation is important, and not trying to time it completely. But for people who already have an allocation, I think you're right, buying the dips, and you're absolutely right. When we see another financial crisis, potentially gold could fall further in the short term, and that's a better time to buy for sure, yeah.
Well, everybody should own some gold and silver. As I said, I've owned gold and silver for a long time, never sold any, haven't bought any in several years. But if the opportunity comes along, which I expect, and who knows if I'm right, but if it comes, I hope I'm smart enough to buy a lot of gold and silver, because before this is over, throughout history, when people lose confidence in governments and lose confidence in money and whatever's going on, they always revert to gold and silver. It doesn't matter whether they should or not, Mark. That's what they do, and they'll do it again. And so I hope I'm smart enough to stock up even more.
Very good. I'm sure you will. And in terms of how you own gold, obviously you're a physical man, and you like coins and bars. Is there a particular location or jurisdiction that you particularly like in terms of owning gold and silver?
Well, probably shouldn't tell you, because then you'll know where my gold is if I sell it. No, I have.
When I would divulge, I mean more the vaults. Where would you prefer to store it vault-wise? Is it Zurich, Singapore, Hong Kong?
Traditionally, Switzerland, Austria, Singapore. Singapore, not traditionally, but certainly in recent years, I do have precious metals in all three of those. I think
that's interesting. Yeah, and that's what we tell clients to do. Don't pick one jurisdiction. Have that geographic diversification, and pick 2 and potentially 3 jurisdictions. Yeah. Well,
I have 3.
Yeah, very good, very good. And you don't want to diversify too much as well. So I think 2 or 3 is perfect. So this is a question that we ask a lot of our Goldnomics podcast guests, which is, what do precious metals owners know that other investors don't know?
Well, we'll find out. Will he find out that we're either geniuses or that we're fools? In my view, before this is over, I said before, gold and silver are going to turn into a huge bubble because the people are going to lose confidence in everything. All governments are going to lose confidence in paper money. And when they do that, they're going to revert to gold and silver. It's going to go very, very high. It will probably. The problem, Mark, is if they do turn into a bubble, is then I got to sell, and I don't want to. I'd like for my children to own my gold and silver someday. I'm that confident in the long-term future of gold and silver. But we know that when there's a bubble, whatever the bubble is, you have to sell it because all bubbles collapse. I don't want to sell my gold and silver, but if they turn into a big bubble, which I expect, then I'll have to sell.
Absolutely. I think it's about rebalancing and reducing allocations. I think always have a small core allocation to physical, but absolutely we should reduce allocations, and then there'll be real value presumably in stock markets and property markets and indeed bond markets. It's funny, we went on Bloomberg in 2011 and said gold is a bubble when it had gone parabolic and was over $1,800, and we said it's a bubble and it could fall 50%, but we said we don't think it will, but it could fall 50% as it did in the 1970s, as you were saying around the same time, But with hindsight, I wish we'd have been a little bit more vocal and active with our clients and actually encouraged them to reduce allocations at that time. I mean, we said it clearly, we shouted from the rooftops it's overvalued in the short term, but I think the next time we might be a little bit more I suppose proactive in telling people to reduce allocations, because absolutely you don't want to get married to, it's not a trade per se, but get married to it's all cyclical, as we know, and these things become overvalued and undervalued, and it's all part of the cycle.
Well, I certainly got a lot of abuse when I was saying that at almost the exact top, but I've been abused many times for saying something, and sometimes they turn out right.
Yeah, absolutely. So, having traveled the world as the adventure capitalist, a question we're interested to know is, knowing what you're a man of the world, and you've lived in Asia for a number of years. You've traveled in most countries in the world. If not, actually, how many countries in the world were you in on the two trips?
Well, on the last trip, it was 116 countries on that trip. I don't actually know how many countries I visited. I never sat down to count them up. On that trip, I did.
But well over 100, yeah.
I've been to a few countries, yes.
So what advice would you give to your 25-year-old self, knowing what you know now?
You should know Mandarin. Your language, certainly your second language, if it's not your first language, should be Mandarin.
And teaching your children Mandarin, yeah.
You should certainly know two languages. I would say one of them should be Mandarin. At the moment, it would be Mandarin and English, obviously, and know about the world. Everybody needs a plan B in the 21st century, because one thing we do know is that the world is constantly changing. Everything that people thought in any year is different 15 years later. I mean, 1900, everything people thought in 1900 was wrong in 1915. 1930, you pick a year. The world is enormously different 15 years later. So you must understand that. And wherever you live, you need a plan B. And you certainly need a plan B for your investments and for your life, including learning Mandarin if you can, or whatever your language happens to be.
Yeah, very good. And in terms of that plan B, do you mean, obviously that involves international diversification in terms of your investments, and do you also mean in terms of your livelihood, your potentially your business, if you're a business, your residence?
Well, yes, I would have a plan B for residence. In many nationalities, you can have two passports. If you live in a country where you can have two passports, I would certainly urge you to have a second passport, because only having one passport in the 21st century will probably be dangerous at some point. If you can have maybe you don't have to move to another country, but at least have a plan of where you might go if you had to. I mean, you hope you don't ever have to leave your country. Nobody wants to do that. But you also have fire insurance. You hope you never use your fire insurance. You hope that your house never burns down. But if it does, you're very glad you have fire insurance. So everybody needs to have a plan B just in case.
Absolutely. I mean, it's so common sense, really, when you think about it. But I think straight away people get, when they hear it, they get fearful when they hear that, and they think, oh, it's doom and gloom, and they cannot bring themselves to comprehend these worst case scenarios, But when you study history, it just happens much more frequently than people realize. So
well, you can certainly have investments in another country, if nothing else. There are always great opportunities in some place, and maybe not in your country. So if you have investments in a second or third country, you will probably make money, and you have insurance.
Absolutely, I know you have to be adaptable and flexible, and that's what I love about your analysis. Some people might pigeonhole it as doom and gloom, but it's quite the opposite. You're actually always seeing where these opportunities are, and there are always opportunities, even in the difficult financial and economic circumstances which we're going to find ourselves in. There's always a bull market in something. There's always an opportunity in some sector, but potentially there's more opportunities. Because people don't see the opportunities in when times become more difficult and the outlook is more uncertain.
Well, I don't consider it doom and gloom to say that there are great opportunities in Russia right now or Zimbabwe right now. I see that as opportunity. I see better opportunities in Zimbabwe than I do in most countries in the world. Is that doom and gloom, or is that optimism? I consider it optimism.
Well, absolutely. It's very, very positive for the people of Zimbabwe, and I'm glad there are some people who are bullish on it, and they've had a tough time down there. So it's important that some investors see the opportunity there and start putting capital in there, and that's what's going to help their society recover from the hyperinflation. So, Jim, you've been great, fascinating as ever. A few new insights from you, new nuggets, and it's great to have had you on. And thanks again for your time.
Thank you, Mark. Let's do it again someday.
Yeah, I'd love to. I'd like to talk about the ETF, the artificial intelligence, and obviously you see opportunities in that sector as well. So, I'd love to have another conversation with you, and let's try to do that again in the coming weeks.
Let me know. Thank you.
Brilliant.
Bye.
Thanks, Jim. Take care. Bye.
You're listening to the Goldnomics Podcast, with new episodes every month on iTunes, YouTube, and SoundCloud. Subscribe to stay informed.